Hello everyone, welcome back to Stock Market Meridian. Today is 7th August 2026 and you're watching today's post-market report. Let's begin with today's market action. After nearly 9 consecutive sessions of resilience, the Indian market finally witnessed a gap-down opening today and remained under pressure throughout the trading session, eventually closing in the negative zone. In my view, one of the major reasons behind today's weakness is the uncertainty surrounding the Iran-US geopolitical situation ahead of the weekend. Markets can usually digest any clear outcome, whether it's positive or negative. But what markets dislike the most is uncertainty, suspense, and unanswered questions. That's exactly what investors are dealing with right now, leading to cautious sentiment across the market. Now let's look at today's sectoral performance. Today's top losers are financial services and private banking sectors, and top gainers are auto and IT sectors. This clearly indicates that investors shifted towards relatively defensive and selective sectors, while avoiding financial counters.
Now let's quickly dive into today's top news and updates. First update is RBI proposes major changes for NBFC lending. The biggest regulatory development today came from the Reserve Bank of India. RBI has released draft guidelines proposing a major structural change for non-banking financial companies, NBFCs. Under the proposal, NBFCs will be allowed to offer only term loans with fixed sanctioned amounts and predetermined sanction periods. The RBI has proposed banning revolving credit facilities, including flexi loans and reusable digital credit lines, where customers can repeatedly borrow after repaying principal. However, this restriction will not apply to credit card issuing NBFCs, since revolving credit is a core feature of credit cards. The central bank has invited stakeholder feedback until 28th August 2026. The announcement immediately impacted NBFC stocks. Bajaj Finance fell nearly 5.5%, becoming the biggest loser on the Nifty index today. Meanwhile, brokerage stocks also remained under pressure. Angel One declined around 2.4%, while Motilal Oswal slipped nearly 1%, mainly because trading turnover has fallen after the implementation of the closing auction session (CAS). Weekly F&O turnover by FIIs also dropped significantly, indicating reduced trading activity. On the positive side, the Bajaj Group's insurance businesses reported healthy monthly business updates. Bajaj General Insurance reported 13% year-on-year growth in gross direct premium. Bajaj Life Insurance posted 20.3% year-on-year growth in new business premium. Overall, if these draft guidelines are implemented in their current form, they could significantly reshape India's digital lending and retail NBFC ecosystem.
Next update, AWL Agri Business. India's food regulator, FSSAI, has imposed a penalty on AWL Agri Business Limited. The action relates to Fortune Friola refined sunflower oil. A sample collected from a hotel in Goa failed laboratory testing because vitamin A and vitamin D levels were found below prescribed standards. Even after retesting at a referral laboratory, the vitamin D deficiency was confirmed. As a result, the product was declared substandard under the Food Safety and Standards Act. Although FSSAI has issued the adjudication order, the monetary penalty amount has not yet been publicly disclosed. This development also reflects the regulator's increasing scrutiny of India's food and beverage industry. Next update, Adani Green Energy. Adani Green Energy remained one of today's major buzz stocks.
Two leading domestic brokerages, Axis Capital and Elara Capital, have initiated coverage on the company with positive ratings. Axis Capital started coverage with a buy rating and a target price of 1704 rupees, indicating nearly 23% upside. Elara Capital initiated coverage with an accumulate rating and a target price of 1502 rupees, implying around 9% upside. Both firms believe Adani Green is well positioned to benefit from India's accelerating renewable energy transition. The company aims to expand its renewable capacity to 50 gigawatts by FY30, while aggressively increasing investments in battery energy storage systems, BESS, and pumped hydro projects. Brokerages expect strong EBITDA growth over the coming years, while debt ratios are projected to improve substantially. However, they also highlighted execution delays and transmission infrastructure as the key risks. Next update, Kalyan Jewellers. Kalyan Jewellers also remained in focus today. The stock rallied nearly 5%, touching an intraday high of 629 rupees after global brokerage Jefferies initiated coverage. Jefferies assigned a buy rating with a target price of 830 rupees, implying around 39% upside. The brokerage expects strong revenue and earnings growth through FY29, supported by franchise-led expansion and continued market share gains. The company recently reported impressive Q1 FY27 results. Net profit increased 32% year-on-year. Revenue surged 45.7% year-on-year. EBITDA also posted healthy growth. Technical analysts now see 560 rupees as an important support level, while a sustained move above 650 rupees could potentially open the path towards 700-720
rupees. Next update, Chris Wood portfolio changes. Jefferies Global Head of Equity Strategy, Chris Wood, has announced major changes to his India-focused model portfolio. He has removed HDFC Bank, PB Fintech and added MCX, Lenskart, both with 4% allocation. He also replaced REC with Bajaj Finance and increased allocation to Eternal while reducing exposure to Bharti Airtel. According to Wood, improving foreign inflows, strong corporate lending and resilient domestic demand continue supporting the Indian market. However, one important point to remember, never make your investment decisions solely based on any investor's portfolio or recommendation. Always do your own research, analyze the business yourself and invest according to your own conviction and risk appetite. Next update, Tata Technologies. Tata Technologies also remained under the spotlight. The company clarified exchange queries regarding media reports about a Honda outsourcing contract. Management stated that winning a vehicle development program from a Japanese OEM had already been disclosed during its Q4 FY26 earnings release and reiterated in the Q1 FY27 earnings release. Therefore, the recent media reports did not require any fresh disclosure. The company also explained that confidentiality agreements prevent it from publicly naming customers. Following recent media speculation, Tata Technologies shares have rallied nearly 15% over the past 2 trading sessions. Next update, positive news for wind energy. A major positive development emerged from the United States. A US district court has ordered the removal of the administrative freeze on onshore wind energy projects. This decision is expected to accelerate approvals, construction activity, and investment across the global renewable energy sector. The ruling reduces regulatory uncertainty and is considered a positive development for companies operating in the wind energy ecosystem. Back home, stocks like Suzlon Energy remained in focus after this global development. Now let's move to the quarterly results section. Hindalco Industries. Hindalco delivered a strong set of quarterly numbers. Almost every earnings parameter improved significantly and overall the results were largely in line with market expectations. Overall, the results were good. Next, State Bank of India. State Bank of India reported mixed numbers. Net interest income improved. However, revenue declined on a quarterly basis. Net interest margins declined both yearly and quarterly. On the positive side, non-performing assets continued to improve, reflecting healthy asset quality. Overall, compared with several other PSU banks, the results were just okay. Next, Muthoot Finance. Muthoot Finance reported revenue and net interest income improved on a yearly basis. Both declined on a quarter-on-quarter basis. Margins softened. Asset quality remained healthy with improving non-performing assets. Overall, the results were good. Next, Godrej Consumer Products. Godrej Consumer reported strong improvement in revenue and net profit. However, EBITDA declined sequentially. Margins weakened on both yearly and quarterly comparisons. Overall, the results were weak. Next, Paras Defense. Paras Defense delivered another impressive performance. Although quarterly earnings moderated, which is quite common in manufacturing and defense businesses after a strong fourth quarter, all major earnings parameters improved on a yearly basis. Margins also improved even on a quarterly basis. This was the biggest positive surprise. Overall, the results were super good. So, that's all for today's post-market report. If you found this video helpful, don't forget to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian for daily pre-market and post-market analysis. I'll be back on Monday morning with another detailed pre-market report before the markets open. Until then, thank you for watching. Signing off, Jai Hind.